Good morning, everyone, and welcome to our latest session of Tambarara. I'm joined by some very familiar faces. On my right, I've got Cornelius. How are you doing?
I'm good. How are you doing?
I'm great myself, and I've got Happy. How are you doing?
Fine, thanks, Tanasha. How are you?
Great. So let's just jump straight right into it. We'll start with RBZ. RBZ has been in the news recently. They've raised their key rate to 60%, obviously in pursuit of a much tighter monetary policy. Do you guys want to kick us off with your thoughts?
Yes, so they had the MPC resolutions that were out yesterday. They raised several key points, but I think the foremost one was that inflation had gone up much higher than what everyone had predicted. They would have been better with an inflation rate of a monthly inflation rate of below 5%, which would have ensured that at least inflation ends the year around 40 to the early 50s, 51, 52%, or their target of 53, but now it's 6.7. That's like a very high rate of inflation. So yesterday they did say that they're raising the interest rate, their key policy rate, to 60%, which means banks allowed a margin interest rates would be around 67, 70%. This discourages borrowing and just makes everything, the cost of doing business in this country, to be very expensive. Obviously, they've got their reasons. They want those negative interest rates to at least translate into real interest rates and then encourage savings. That's according to them, but we know that doesn't work.
Yeah, they bring up savings because they increased the savings and time deposits from 5 and 10% to 7.5 and 20% respectively. I think this is just a quick fix. It's not going to have much of an effect. It's not going to make me or you put money in the bank. And I think this increase in the key policy rate just shows what the inflation expectations are from the central bank, which is just going to feed more into the black market. Because people are going to be like, hey, they're panicking here, they're doing quick fixes. I don't think this will do anything for us really, but they're just going to see the black market continue to run.
Right, but I mean, as much as you call it a quick fix and as much as inflation isn't where we hoped it would be, it does not steps in the right direction. At least they're trying something. Like, surely that's a positive coming out of this.
I don't know if contractionary monetary policy is the right policy in this environment. We need the economy to grow. We need to meet the 7% growth target. By tightening things further, it means that spending will be curtailed. A lot of things, they did raise a lot of things, their payment culture within government, and then they also said reserve money is not going to grow. It's like a 10% now, which is in line with regional averages, but it's still high anyway. But for this economy, we probably don't need that. We need to be able to produce. They're happy with forex receipts, which they say it's 7.4 billion, which is a record high. But if we look at that component, that's like diaspora remittances, guys sending money back home, and then we've also benefited from platinum, palladium prices that are like at record highs. I don't think it's the right policy. It's a lot of twinkling and fiddling. What's key is that they need to just restore confidence in the local currency. That should have been their first objective, and that is what should have been key. People need to start using the Zim dollar, and then if you are to look even at their reserve money, it's like a 60-40% split, 60% being foreign currencies, which is not viable in any way in an economy that wants to de-dollarize, and in an economy where Mutuli has said they're not going to dollarize. So I think they should have focused on use of the Zim dollar. Firstly, I think what the budget needs to do is to say that no government department is going to accept US dollars. Everyone needs to pay taxes in local currency at whatever rate that they decide. That way you make the Zim dollar your transaction of choice for your statutory obligations. Don't give people a choice, but we need the Zim dollar to be used, because we're just going to do this. I'll tell you, by April, we're just going to be back in that scenario and the rate will start moving again.
Yeah, honestly, I think I've said it better myself. I feel there's a divergence between, what's currently happening, the policies we're putting in, and what the country needs. And obviously, that's always going to be a sore point in the country's development. But again, we just have to see where this goes. Moving on to our next headline, the Mining Promotion Corporation, MPC. I'm sure you guys have heard about the injection, approximately 5 million, obviously to help spearhead the exploration of the mining sector and that kind of stuff. Again, what are your thoughts on that?
It's a good step in the right direction, but I do also think it's a quick fix because we have to actually sort out the underlying problems. Miners, for one, are not receiving their money on time from Fidelity printers when they do deliver the explored minerals. And two, 40% of the export proceeds are going to RBZ, for which they're going to lose value in terms of the exchange rate losses there. And they need that USD because they need to import raw materials and machinery to basically carry out further exploration. So the problem is that it's going to be a continued bottleneck for suppliers. And also we have the MMCZ sanctions as well, which is basically our mineral exporter. So when you have all these things working against the mining sector, it's very difficult to now get a hold on foreign currency, which they desperately need. So I don't know, this $5 million to me is just another quick fix.
Yeah, quick fix seems to be your word for the day.
That's my word for the day.
I'd like to disagree a little bit on the miners' surrender requirements, but the solution is this. The solution is miners don't need to pay taxes in foreign currency. They don't need to pay for electricity in foreign currency. If they pay that in local currency at the official exchange rate, then that 40% is not too much. In fact, it's quite generous if you consider other countries. In South Africa, it's like 100%. I mean, you get all the money in rand. So I think I think what government needs to move towards is to just get USD dollar use. Say taxes, miners have to pay taxes in local currency at the official exchange rate and pay their obligations, all their statutory obligations at the local exchange rate, so that will solve the problem and miners won't have to complain. I mean, 80% or even 100% retention wouldn't be fair, even on government, even on any economic policy. So mining is a tricky one. We still have a lot of things to do. I mean, 5 million exploration, that's nothing. I mean, that's really nothing. It just covers a small, it's just like a Riozin exploration. It's not supposed to be a government funded thing, or it's like government pushing for 5 million to explore what? I mean, for government they would require large sums of money, but we know that mining is risky capital. We're not going to get that in the short term in this country. All our things are out of order, everything, exchange rate, inflation, even the country risk itself, so we're not going to attract money. I would estimate, and then that's based on what the miners themselves will say, we need about $12 billion to get the mining sector moving in the right direction. It's not the complete sum, but in totality, the mining sector requires in excess of 12 billion. But where are you going to get the capital?
But also the retention, I disagree. We can't compare our retention rate in South Africa.
No, but we can. If we're moving towards a middle income, whatever mantra that you use, but we've got to start thinking in that way. What do other countries
do? We don't have an international currency for
exactly.
I can't take bonds or RTGS to UK and spend money. At least
then make it an international currency. Why are you not making it work towards that?
Because no one trusts us, that's the thing.
Yeah, but work towards that. Instead of saying, no, we'll do this retention and we'll get people to 80%. In fact, it is 80% if you increase your production, 100% if you list on the VFX. So it's really not bad. They should be listing on the VFX instead of complaining. But the solution is they just need to pay their obligations in local currency. That 40%, if it goes to electricity, if it goes to taxes, Zimra does not need to be collecting US dollar taxes at the moment. If we are to make everything work, the trick is just into getting local currency use and local currency acceptance for everything. So for the mining sector, for government itself, that's the thing.
But you all know Zimra doesn't operate like that. If you make US dollar revenue, you're going to pay US dollar taxes.
No, but there's that 20%, so then there won't be confidence in the local currency, and we'll continue having these problems, and it will continue being a cycle. We've run, I think, issues where we've documented this from the very beginning, 1890s, when roads came. How did they promote local currency use? They came to Africa, and Africans were not money people. They didn't know money, they had barter trade. How did they promote that use? To say the taxes have to be in cash. It's not going to be barter trade anymore and everything. So you have to promote use of your local currency. I mean, it's been used, it's not new, promote it.
Yeah, fair. Again, just on that note, speaking about local currency, again, of course, I want to hear what you guys think. You guys have all seen auction rates reached being devalued down to 97 this week. Again, what do you think of the implications of that on the market, on the country? How do you guys see this development?
Well, we did say, like those of you who read Phoenix, that there's going to be sharp devaluation in the coming 2 weeks, and that's what's happening. They're pursuing probably 120, 130 rate. It's a little bit too late, I think, to get to try to devalue sharply. It's just going to create a mess out of your pricing system. That means you've got to constantly adjust, and then your taxes, you can't focus properly, you don't know where the rate is. That just brings chaos to the whole accounting and your tax issues. So it's a little bit too late. I should have started on sharp devaluation from the beginning last year to catch up with the black market rate. It's steady now at around 180. It's not going to move up, maybe until the bonuses start coming in and everyone starts chasing the US dollar. But they tried to introduce another special $100 per month. But how many of you are actually queuing for that $50? Because it's hectic. Have you done that once or twice?
Once,
Just to test. Well, it was a brilliant idea because at $200 you would actually get, all your, for low income earners, that's like your monthly rentals and all your bus money, that's there. But I think for anyone else, it's hectic. And the money changers already just rated the whole queuing process, and they book, they pay, they way through. So it's just, another tinkling, fiddling, just let's fix this, let's fix that. Yeah, your favorite word for the day. Quick fix. It's another quick fix. So, devaluation is, but they probably just need to do just one sharp devaluation, get to 120 and just leave it there for a while.
Yeah, and I wouldn't want to be an SME at the auction at the moment, because I know there's going to be a backlog. I'm going to wait 2 to 3 weeks to receive my money. I may lock in a rate of, let's say, 93, and then by next week it's going to be 110. So then I'm still going to have an exchange rate loss. It won't be as bad as it would be in the black market, but there's still fundamental issues that need to be sorted. That time is the money.
And the thing is, well, for this option, they cut off all bids at 95. So that was the lowest that they accepted, and then the highest bid was 115. And that differential is not healthy. I mean, you can't get someone being allocated 115, and then you expect them to have a pricing structure that's in any form with the average rate.
Yeah, and again, like you mentioned before, even on a personal level, there's always timing risk and just risk with auction. This affects companies and corporations as well. And again, speaking of companies, results season-ish. We had InScore and NatFoods. I know here the analysts are moving to go on InScore. Results came out, or trading updates. What do you think about those?
Yeah, so I had done a report on the full years, and basically my projections were in line with what's happening. I think what's really aided InScore is the maize division. That import ban came in time because, of course, last year we had to import quite a bit of maize in the first quarter because of the droughts that we'd experienced in 2019. But now we're producing our own maize. They're able to supply. And the thing about InScore, the beauty of that business, they control the whole value chain.
Right.
They subcontract farmers, and the farmers, they buy from the farmers, and the farmers bring it to the milling division. And the milling division sells it on to the retailers, and the retailers to the final consumer. So if you have a business model of that kind, you can actually push inflation throughout your value chain. So you're insulated from the effects of inflation, really. Which is why that's what Fitz also done. I know you're the analyst there.
That I'll just mention a bit on Netflix as well. The trading updates came out, volumes were up. And again, share price, if you've seen in the last 2 weeks, has been ramping up since its full year results. I think, 2,000% year to date share price. And again, it's got the fundamentals to back that up as well. I'm not disappointed with Netflix at all. Again, funny enough, most people don't realize that usually in a good harvesting season, Netflix does tend to perform lower or perform not as well as it would have, because farmers tend to then not need to buy from a third party. But despite the great season we have and the great season coming up as predicted, Netflix is still outperforming.
But our season is not that great.
I mean, comparatively.
Not really. I mean, check the maize deliveries that they released on Tuesdays. We're not going to meet our target of 1.8 million. We're just at the 1 million mark. So yeah.
It was a very ambitious target.
No, but
But
you
I
all
mean-
believed it and you thought, yeah.
But yeah,
And you thought-
I think wheat was projected to 300,000 metric tons. The target was
I
360,000.
mean, what's the saying? Shoot for the stars. Go back on the mood of it.
Yeah, so I think for INSCO, yes, they did very well. On certain lines, perhaps maybe not with Evans and those other pro-dairy things, they didn't do too well.
Yeah, the old chicks wasn't into the raw. My poultry division, cocoa,
yeah. Well, they shouldn't allow such trading updates that just show volumes, nothing to do, nothing, no revenue lines, and nothing.
Yeah.
So you really can't comment. Volumes in this environment are going to go up. I mean, consumer recovery is there. People's salaries are being adjusted. So obviously they will push volumes, no doubt. I think the standard would be like 50%. Someone would have done very well in this environment, but I think 20, 26%, 36 is like our average. It's not really an exciting performance. It's okay, but not very exciting.
Yeah. But the volume is the most real part of an analysis. Because if you're going to look at, you're going to be mad by historical figures, inflation adjusted, how are they adjusting for
Yes,
inflation?
but then if you check historically,
Yeah.
so historically in bad seasons, then volumes would drop by 40%, then you know it's really bad.
Yeah.
10% would have been, you know, they would still make money.
Yeah.
So in this season, there's got to be a benchmark to say 40% and upwards. That's very good. If it's 36%, then there's going to be like your operating costs, which you know are going up, and they will continue going up. That's going to squeeze your margins, and then your profitability is not going to be very outstanding. So there's got to be a benchmark. I'd say like above 40%, that's exceptional performance. Below that,
Is that sustainable growth, though? 40%?
yeah. So we agree.
But I'm quite bullish on INSCO. They basically spearheaded technological advancement in every division. National Foods, I'm sure you've seen as well. So I definitely see, they're ready for volume intake, and I think they're going to reduce margins with the technological advancements as well. So I think margins will improve. Let's hope so.
Yeah, but INSCO needs a lot of capital.
Yeah.
So the 70 million watches that they provided is not enough for what they really need to do to be ramping up production. You know, like the divisions like Iris, is it the biscuit one? They still make handmade biscuits. They don't have machinery, so you need to capacitate them.
Yeah.
For them to at least, maybe it's a style to say handmade, but it's not. It's not efficient. But they do need a lot of money. I don't think the banks have capacity to be able to fund it in school as it is. But once they get capital, yes, it's unstoppable. And then they keep adding stuff to the structure.
And profits. I mean, the stock fees, if you look at the projection of where livestock is going in the next year or so, we project to have very good livestock. Agricultural growth rate was reviewed upwards to 36% from 34%. So I think that will help them. They're well positioned. Their whole business is insulated. It just supports the
Yeah, but
economic
what is it too bullish about agriculture? It's too bullish about agriculture. I wouldn't
Buy
say, buy it for yes, but not because of agriculture. Just buy it because it's a good business. I think what sets INSCO apart and then a few other companies is that it's got good management. So it's management that knows what it's doing.
Yeah.
So it's not the same as Silo or GMB, which could compete with INSCO had they the proper management skills and the proper things that are required. The Silo is also just big as INSCO, but it's poorly run, poorly managed, and it's government. So I think INSCO, what's going on for it is that they've got good, very good management who are adept to the environment and to what's happening.
I think you guys summarized the whole INSCO and average results pretty well. And if there's nothing else to add on, I think that brings us to the end of this
Please
session.
don't be bullish about agriculture.
Be bullish on INSCO.
Be bullish on INSCO, but not agriculture.
Don't feel pressured by these two. Thank you guys for tuning in. Make sure to like, share, comment, subscribe, and catch us next week for our next session of Tambarara.